I'm going to share my screen and basically just kind of go through the details of that product so that you guys know that you have another option available. One of the most important things here is that it, with people probably being concerned about their finances and about the future. We pretty much have our core product, which is the Assurance Active product that pretty much everybody on this call uses. But there are options. There's one other option available that's called Assurance Select. So I'm going to share my screen, do a presentation really quick here. The Homestead actually came out a while ago and presented our team, and so I basically used their same presentation. Yeah.
I'm going to mute everyone real quick.
That would be fine. Thank you.
Muted.
And it's
Unmuted.
select. Now, what you're going to want to do is, if you use your phone for the app calculator, you have to add this product. So you have options for products. In just about every case, you're picking Assurance Active. Leave everything else unmarked, but also add Assurance Select to your option. So this gives you the option to be able to use the Select product and to calculate premiums with that product. You can basically do the same thing as well with the online calculators. However, this is not a product that is available for online enrollment. So just keep that in mind, that you will have to do because there's extra health questions, those forms aren't built into the online enrollment. So this is going to be a paper form process. Of course, you can still use your limited power of attorney and things like that. When you ask the health questions, you can still sign on their behalf. But we'll kind of go through the details of that product. But really what it's designed for is to meet the needs of the younger market. So this is a product that is available for people who are between the ages of 20 and 65. So if they're over age 65, you would not be able to offer this product. It's for people who are 65 and younger. However, with that being said, a lot of times we are meeting with families who are aftercare families. They're younger, they're in their 50s and maybe their early 60s. This is a really good product to offer them. Now you can, if you want, you can offer them the Assurance Active product. And if maybe those premiums are too steep, you could ask their permission to ask additional health questions and maybe be able to save them on their premium. And I think most people who are in good health would say, yeah, I'd be willing to do that. And so there's an extra form that you have to do, and I'm going to show that to you in just a second. So use all of the same paperwork that you would normally write. However, there is an additional form that you will need to fill out. So the best way, obviously, to go about this is that if the proposed insured, if they're under age 65 and they answer no to the 2 health questions on the general enrollment form that we're all using now, they can be given again the opportunity to answer additional health questions regarding their health. If all the questions on the supplemental application are answered favorably, the proposed insured may qualify for the Assurance Select product. We see these policies come through on a very regular basis, and again, you're going to see here that it is definitely worth it to offer this, especially if you're trying to get their total premium down in price just a little bit. So always keep this in the back of your mind. This is what the additional paperwork looks like. So following the call today, we'll of course send out a YouTube link of this recording, but I'll also have this attachment with it as well. And this is the extra health questions that have to be asked when you're selling the Select product. So this is basically for preferred premiums. It gets in a little more detail. I'm not going to read through them all right now, but you can look at this form when I send it out to you. It asks some questions about tobacco use and just more detailed questions about any existing ailments that they have. There is also, I'll send to you, well, actually, here's the questions they're going through them here. Within the past 5 years of being diagnosed, treated, or taking medication for any of the following. It's just more detailed with when it gets into like cancer, heart disease, asthma, liver disease, mental illness. There's just more detail in each of the questions. Within the past 2 years, have you regularly used tobacco? Are you currently working? So if somebody is unemployed or disabled, they're not eligible for this product. Within the past 5 years, have you been diagnosed or treated for any ailments not listed above? If yes, provide details. And then they also have to provide the name, address, and phone number of any of their physicians who've treated them within the last 5 years. What I typically recommend on that is that they just list their primary physician. So they don't need to necessarily list if they've seen specialists and things like that. However, most people who have, seen specialists within the last 5 years probably aren't going to be approved for this particular product. But it still is definitely worth it for people under the age of 65 to go through these health questions and see if they're eligible for a lower premium. Along with the extra questions I'll be sending you, I'm also going to send out this impairment guide. And this, basically what the impairment guide is, it goes into great detail on whether or not somebody passes a health questionnaire or fails a health questionnaire based upon how they answer those questions. So it gets into more detail about things like diabetes and asthma, injuries, amputations, things like that. So you can really have an understanding. There's also an impairment guide for this traditional product as well. However, it's not near as important that you know all those details as long as you're asking those health questions word for word when you're doing the enrollment application. So keep that in mind. As I send this stuff out later, you'll have kind of more of an understanding of how that works. But also, they will be signing on that form an authorization for release of medical records. So there's the Medical Information Bureau that provides information to life insurance companies, and homesteaders may request a medical information background check. Because these premiums are significantly lower, basically there's just more underwriting associated with writing this product. However, many people on the team have used this very successfully for those younger ages and people who are in good health. And right now, we need to be able to offer as many options as we can, especially while people are trying to keep their costs down just a little bit. Doing the extra work to save them a significant amount on their premiums is definitely worth it. So the other thing that's really important is that on every select policy that you sell, they will have to do a phone call, and they'll go back through the health questions with the insured. So this is something different than from the traditional product, where if they answer the health questions yes or no, it doesn't make a difference unless the policy is over a certain amount. I believe that amount now is $17,500. So if somebody answers no to both health questions, and this is with the original product, Assurance Active, and their policy is over $17,500, then they do get a phone call. All select policies will get that phone call. So make sure you let the family know that they'll be getting a phone call. That obviously means that it might take a little extra time to issue these policies, but again, it's totally worth it with the amount they're going to save on their premiums. So you can see here that typically the time is going to be around 3 to 5 days from receipt of the enrollment form. This is obviously paperwork that you're going to have to use. You can use the online upload process with the papers that we showed you a few weeks back. You can certainly go onto YouTube as a refresher, or just ask your manager on how to upload contracts directly to homesteaders. You can use the fax and app option as opposed to having to mail the paperwork. So to speed things up, it makes a lot more sense to use the fax and app, or to use the online upload system to be able to just send paperwork directly to homesteaders. That's going to speed up the process significantly for the phone interview and having the policy issued. These are just some other things, of course, that they're a little bit different. The policy can't be backdated for more than 30 days. The only reason that you would typically backdate a policy is if someone was in a new age bracket where their premium was going to go up just a little bit. But keep in mind, when you backdate a policy, that that their next premium can be due very, very quickly. But just like the other products, everything is age banded, very similarly to the original product. So we'll be sending you, or your manager will be sending you, a new commission sheet. The commissions are really equivalent to what you're currently making on the other products. Again, it's just a little bit extra work to have these policies issued. So with that being said, there's a little bit of a different chargeback policy. Typically, of course, this isn't going to be an issue because these people are in good health, but death claims and lapses have a full chargeback in the first year, and then during the second year, the chargebacks are prorated. So with the Assurance Active product, once the policy makes it a year, there's no chargeback. With the Select product, there's a chargeback period for up to 2 years. It's prorated in the second year, though. So, for example, if the policy lapsed in the 13th month, you're charged back 11 months of commission. So that's if it obviously is if they die in the 18th month, they charge you back for 6 months of the commission. So basically, 1/6 of the commission is going to be charged back. Chargebacks are paid from the agent's reserve account, just like all other chargebacks. The important thing about this, though, is that if the family is intending to take advantage of the early payoff policy, which is the basically same as cash for the first 6 months, or same as cash plus $150 in the second 6 months, the Select policy is not eligible for early payoff. However, the premiums can be paid in advance. And you'll see why this is important, is because in some cases, especially with the younger ages, there's actually, if they are making their monthly premiums and they're in their 40s, for example, the amount that they pay in premiums can be equal to or sometimes less than the face amount. So you can't use the original calculations to be able to do that, because sometimes they're actually paying less in premiums than what the face amount of the policy is. And this volume does count towards Leaders Conference. So while some of the other products, people over a certain age can't, those contracts or those policies don't go towards your volume for Leaders Conference, the Select product does add towards your volume for the Leadership Conference. Make sure we talked about this at the beginning. You want to add this to your rate calculator. So when you, this is just some images on how to do that. Open this up on your phone, go into settings, which is that top right-hand corner, and then turn on, you've already got Assurance Active, probably turned on your device now. Also turn on Assurance Select. So when you're calculating the premiums, that you can choose this as an option. Just checking to see if there's any questions that have come through while we're on here. So Nicholas did add on the tobacco side of things. One thing to remember is tobacco in any form, not just smoking. So any sort of nicotine use. So that would be vaping and chewing tobacco and all that kind of stuff too. So keep that in mind. And Nicholas had a question also about the policy change. I'm not sure when that went up, Nicholas, but I believe it. I mean, Aaron, can you verify that? But I believe that went up to 17.5 on the traditional product for the phone call. Isn't that correct?
I haven't heard about that, so I don't know. I could ask. Do you want me to call Steve Brody real quick while you're talking?
You can.
I just got one a couple month or so ago that was 15, and they held it up for a call.
Okay, well, let's go back to 15K. So that's, again, I'm jumping all over the place here, but that's on the traditional Assurance Active product for the phone call. If they're doing a modal pay, this only happens with modal pay. And if they answer no to the health questions in the policies over 15K, you will, or there's a possibility of that. Well, there's not a possibility. They will be called. So always let your family be aware of that as well. Another comment from Melanie here. Looks like she's done some online upload. She says it's rapid, and the policy has been issued the same day that she's uploaded it to the Homesteaders website. So that's awesome. If you guys need a refresher on that, that's on the YouTube channel, but obviously we can help you walk through that as well. So anytime you're doing paper, there's really no reason to mail policies in the mail anymore to homesteaders with the two options that you have available with paper contracts, where you can fax it or you can upload it to the homesteader's website. So if you need a refresher on that, reach out to your manager and ask them how to do that. It's very simple. As long as you know how to scan documents through a printer or some other device, then you can easily just send that paper directly to homesteaders. Again, Select is not available for online enrollment, so you have to do the paper forms.
And Select is available in all states.
Yes, it is available in all states. You are able to use it there in California.
And I just did get confirmation it is 15,000.
15,000, okay. Was it originally 12.5? Because I remember that they raised it at one time. It was 12,
Yeah, it was 12.5 and they raised it to 15.
15. So I raised it to $2,500 more dollars for you, but that was inaccurate information. So don't listen to me.
No more raise.
So what I would do just to kind of get a sense of how this works is to just do some comparisons with the Assurance Active product and the Assurance Select product. This is probably hard to see on your screen, but this is basically taking the same person who's 55 years old. They're buying a $7,500 pre-arrangement amount policy on Assurance Active on the left-hand side, and then comparing it to the Assurance Select. So you have $7,500 of the pre-arrangement amount. You have they're doing monthly, they're doing pre-authorized collection. But this is, and of course, going back to is if they're doing a single pay, there's no reason to do Select because Select is extra health questions. You don't have to ask health questions on the single pay. So anytime you're doing the single pay, you're never going to use the Select product. It's only for modal pay. But look at the significant savings here. So on a 3-year plan, on the original product, their monthly premium would be $281. On the 3-year plan on the Select product, their monthly premium is only $197. So they're saving about $90 a month on the 3-year plan. Very similar on the 5-year plan. Their premium is $205.44 on the original product, Assurance Active, only $126 per month on the 5-year plan. If you offer 7-year in your state, you can see there that, again, a significant difference. And on the 10-year plan, which you guys might not be able to see because it's cutting you off. Let's see if I can shrink it down just a little bit. Probably won't be able to. Looks like about $126 versus $84 per month. So this is for a $7,500 policy. And again, if you do the math on that, they're going to obviously pay significantly less over 10 years than they would on the Assurance Active product. So again, this is a wonderful option, especially right now as we're helping younger families. They're doing a modal pay and they're in good health. This is an option that you have. Following this call, your manager will be reaching out to you to complete. If you haven't already got this in your wheelhouse to be able to offer to families, you do have to sign a new commission sheet and a contract change form to add this product. So reach out directly to your manager. They'll be reaching out to you to be able to send you a contract change form along with the new commission sheet. And you'll see when you compare commissions, they're very comparable to what you're currently getting. You don't get quite as big of a face amount bump, but these policies are designed because of the younger ages and the good health. They're obviously going to have a lot more growth associated via time for the funeral home. Is there any questions? Feel free to unmute yourself about the Select product.
So basically, the insurance fees are a lot less on the Select than they are on the regular.
That is correct. Absolutely. So they use different underwriting standards because of their age and their health. Obviously, these are much lower risk to the company to have to pay out claims on these types of policies until after they're completely paid off. So, obviously the actuaries, as they go through this, someone who's under the age of 65 and even does a 10-year plan, if they don't have any health conditions that prevent them from getting this particular product, the risk is much lower. So yes, they're saving a significant amount on their monthly premiums.
That's very cool. I have 3 families I can go back to immediately.
All right, cool. So Diana brought up a great point. So this is where you maybe want to go back through families who are a little bit younger. They're a little, sometimes they don't see this as important because they think they've got many years left. You know, this is a great option if you can think back on people that you presented with the modal payment option where they just thought the monthly premiums were going to be too high for them. Reach back out to those families and let them know that you have a new option, a new product that you'd like to come over or have them come into the office so you can show them. Again, you know, when you're looking at two policies together, husband and a wife, this can represent significant savings for them. We've even had a lot of these come through for people in their 30s and 40s. So, you know, where that typically isn't a group of people who are thinking about pre-planning, again, these premiums and this product really allows them the option to be able to afford a funeral plan. Of course, the younger they are, the lower the premiums are. So just run some examples and you'll get a sense for how much less. But, you know, for a $7,500 funeral plan, $84 a month on a 55-year-old, that's a very affordable premium for most people. So, you know, just always have this in the back of your mind. Once you know somebody's age, they answer both of their health questions no, you know that that the cost or the monthly cost is important to them and you want to get it down as low as possible for them to help them out. This is the product that you're going to offer. Any other questions about this?
Wes, I don't have a question, but I have a comment. I love this product. Just what Wes was talking about. I love to get it. The price point probably is better 55 and younger. When it starts going 55 to 65, it's probably not as big a savings as you're going to see here. But what I love about this is those people have jobs. They have liquid asset or income and stuff like that. We're not dealing with a 75 or 77-year-old that doesn't have, it's on a fixed income. These people are having jobs. They're being able to work. They can afford, like you said earlier. So this is a great product to be able to have that where they have some liquid assets and money to be able to pay for these plans. So go for it.
Absolutely.
I want to add too,
Yeah.
and you may have already covered this, but it's worth mentioning again. You know, as you're talking with a family, if you sense that they're in that age range and they're very healthy, and obviously your first attempt is just to close on our traditional normal product, active product, but if they just cannot afford it, do not tell them the price until you've gone through all the health questions. Because if you first give someone a quote of for the two of you, it'll be $280. Gosh, there's just no way. Well, there's another option that's $170, but I now need to ask you these health questions. You're never now going to get them to agree to the $280. If you, well, yes, I am a tobacco user in any form. Well, then now never mind. So always ask the extensive health questions first. Say it is a little bit less. I don't know how much of it, kind of play dumb. I don't know how much of a difference it'll be. Let me ask you all these questions, and then you have to really make sure that they'll pass because you can never go back the other way. Once you've told them that lower price, it's almost impossible to get them to agree again to the active product. Does that make sense to everyone?
That's a great point. Always ask the health questions first. I mean, that's even a great on the traditional product. That's even really important before you even get into premiums and things like that. And the way that I would often present that in a great kind of a trial closing is to say, you know, I've got a couple of health questions that I need to ask you that's going to determine that the plan that you're eligible for and to see if you qualify. So, you know, if they answer yes to both of the health questions, you know, congratulations, you qualify for our plan with the graded death benefit. Congratulations, you qualify for our full benefit plan. So, you know, ask the health questions first in both cases because Aaron's absolutely right. Once you show this lower premium that now they don't qualify for, getting them to agree to the higher premium is going to be very difficult. So don't even calculate this until you know that they're eligible to receive it.
Yeah, Nicholas had an example of that. We all have. I think that's the, just if they answer yes to the initial health questions and they're younger and you get a sense that they're very healthy, just ask all the possible questions in depth. Don't be wishy-washy on any of them because they're still going to do a secondary phone call. So if a phone call reveals a health issue, like in Nicholas's example was that he didn't smoke, but he chewed. It came out later that he chewed. Well, now never mind, he doesn't qualify and you've totally lost a sale. So just be very thorough on those questions. So
Absolutely. Yeah, good point. The other thing too, where this comes in really, really handy is that if you're if you've had someone that's maybe gotten a final expense quote from somebody, so not to get totally off on a tangent here, but final expense life insurance is much different than pre-need funeral insurance in that, you know, final expense does not lock in prices, but it is less expensive per month, usually because the term of the contract is much longer. So someone can maybe get I don't know what the numbers would be, but let's say they can get a $10,000 final expense policy for $50 a month that they're going to be paying on for the next 20 years. You know, looking at that monthly premium, but you can easily now, you know, talk about that, you know, while your premium, you know, one, they're only going to have to pay for 10 years, this amount, but the other advantage that they're getting is they're actually able to lock in funeral prices. So, you know, so if you're comparing that and you're competing against someone who is considering a final expense policy versus a guaranteed pre-need funeral plan, you now have another option, again, for people who are younger, that you can easily compete with those premiums a lot more effectively, and you can offer the benefit of locking in today's funeral price. So that's another, you know, good opportunity that this can be used, is when people are, you know, again, trying to get a final expense policy, that the monthly premiums can be fairly low on those for the younger ages, but considering they're paying on it for 20 years and they're not locking in the prices, you can quickly show them what that would mean if they buy a $10,000 plan that would cover their funeral expenses now. 20 years from now, that same funeral is going to be 30 or 35,000. Someone's going to have to come up with a difference. So yeah, you're saving a little bit each month, but your family's going to be stuck with a big bill for only $40 more per month. You can only pay on this for 10 years. And you're also able to lock in today's prices. So it's a really great way to compete against final expense as well. Not that that comes up very often, but I do know that occasionally people have brought that up where, well, they can get this final expense policy for half the premium for the same face amount, but again, they're not locking in the prices. So even with our original product, I don't think it's a better deal to go with a final expense product. Because they're not locking in the prices, and oftentimes the family has to come up with the balance, but just kind of keep that. And they're also paying on those for some of them are for life, so they're going to pay that premium until the day they die. So just kind of keep.
Also, a thought in addition to that is you get referrals. So if you're meeting with someone in their 70s or 80s, likely their kids are in this age range. And so as you ask the names of their grown children, they'll know, okay, are they between 45 and 55 or 55 to 65, and then make a note of that. And then when you call them, you can actually talk about a product that may potentially save them a significant amount of money. So it's a good way to get referrals for the adult children.
Absolutely.
Which I know everyone's getting referrals, right?
Yeah, and as Travis brought up, this is a product that's great for people who they're working. They've got two incomes. They're not retired. This is stuff that they can afford. And again, I believe we have an increased awareness for things that are important. While people might not be going out and spending money on expensive vacations and toys and luxuries right now, this is something that people are going to see as extremely important. So just because someone is a younger age, or you sense that they've got kids or whatever, it does not exempt them from going out and presenting them and showing them how much they can save. And then if you really think about this from a long-term perspective, that they're able to lock in these funeral prices and have 30 or 40 more years of life left, on average, they're saving a lot of money from locking in today's prices. So don't automatically write off people who are younger. Still go out there and present them, and now you've got another option to be able to make it more affordable for them. So, sometimes I've heard, well, I've got this appointment with this family, but they're only in their 40s, they're probably not going to do anything. Get that mindset completely out of your head, because these families will do it. You talk about the value, you talk about price freezing, that in 5-10 years they've got this thing completely paid for. And they're going to live another 30 or 40 years, and just think of the money that they're going to save by taking care of things now versus waiting until they're older when they think they're going to need a funeral plan. So,
Nicholas had a good point. Don't assume someone's health in either direction. He said he had a lady, I'm guessing by huge, I mean she was heavy set. But but was able to answer the health questions where she actually did qualify. So, you know, don't assume. Nicholas said yes, very heavy set. Okay, poor lady, but she's healthy, so good for her. So don't assume either way, just ask the questions. I mean, you just go through the health questions with everyone if they're younger. And I mean, obviously if they're on oxygen, and sometimes you just know, but if they haven't said anything otherwise, I think that's a good point, Nicholas. I'm glad you're able to help her.
Yeah. Either they're healthy or they haven't been to the doctor in a while.
Right.
They answered yes.
They don't know they're not healthy yet.
Yeah. Just a comment. I started my plan. Well, this October, I will be 10 years and I'll be done with mine. And I started the Select product way back when. I was interested in what my payoff was. I started it. It was a $10,000 plan 9 years ago. It jumped. My face amount was $12,500. It's now worth about $19,100.
Wow.
And my,
Huge.
my last payment will be October, so I'm excited about that. But
And that's great. So Travis was only like 19, 10 years ago. So he got a good.
I wish.
All right.
Awesome.
If again, watch for the email. We'll send out the impairment guide. We'll send out, the additional information. We'll send out the extra health questions that have to be filled out for this product. So just get familiar with it. Contact your manager if you have any questions. If you've got one that's younger that you're going to be talking to, just be mindful that you can go back to people who maybe you presented in the past where this product maybe would have been a better option for them. If you know you're meeting with somebody younger, when you're talking to them on the phone, there's some, and this is a great product and is difficult to compete with. We decided we were kind of on the fence on whether or not we should offer this, because we don't want to get too distracted with too many different things, but we really do feel it's important and it provides the best service and cost to the families who are pre-arranging. So keep that in mind. So that kind of wraps up things with the Select product, but we also recently have had just some more questions about a couple things with the other products. So I want to just take a brief minute and just do a couple reminders on the active and the Assurance Active product. So let's go to the next thing. The first is the early payoff option. This is really something that's important to know right now, where sometimes families would maybe do a single pay, but because they're a little bit uncertain about the future and finances and things like that, they aren't really comfortable with paying things off at once. But this early payoff option is a really great way to close on families who could pay in full but aren't quite ready to pull the trigger yet because they want to just ride things out just a little while, or maybe they want to free up some money somewhere. So again, understand this and be able to explain it very well, because it works great for closing and saying, all we need today is the first monthly premium. You've got 6 months to pay this off, same as cash. So, and when I say same as cash, it means that they will pay their funeral price minus any premiums that they paid, and then they just pay their balance. So again, if you've got families, you got to maybe, do that little professional persuasion, but, we'd really like to pay this all at once. I think we're just going to wait until we can pay it all at once. Well, when do you think you might do that? Well, probably we're just going to kind of ride things out a little bit. Hopefully we'll do it within the next 6 months. Well, we have a program that allows you to be able to start your plan with just making the monthly premiums. You've got 6 months to pay it off at the funeral price. So it's not at the face amount, it's at the funeral price. So that's something that's really important, is that if they buy $8,000 plan, that's what their goods and services adds up to be. They paid, $2,000 in premiums over the first 6 months or whatever. Then their balance due is just their funeral amount minus the full amount of the premiums that they paid. So after that point, though, so that's from basically from the beginning of the policy until it's 6 months old. Once it's 6 months in a day, or if after 6 months, they pay the funeral price minus their premiums plus $150. So they basically got 6 months of insurance protection for $150. So 6 months to 1 year, they paid the funeral amount plus $150 processing fee. So still a great deal if people can pay it off within their first year. Just kind of keep that in mind as well. So, you know, your funeral home owner, this is just an idea, but I've done this before in the past where I've said, you know, in fact, if you know you're going to pay this off within the first year and maybe you're not going to get it done within the first 6 months, let me check with my owner and see if I can give you a $150 discount on your funeral plan, which will pay for that $150 fee if you happen to pay it off in between 6 and 12 months. So it's another way to say, you know what, I don't want you to have to pay that fee. If you know we're not going to probably be able to pay this off for 10 months, let's see if I can actually just reduce your funeral plan by $150, which will go ahead and cover that fee. So you have a full 12 months to pay this off, same as cash. So if you have an offer to savings or a discount, or maybe you can get permission from your funeral home owner to just deduct that from the funeral plan, which means that they don't have to pay that $150 fee and they've got a full 12 months to pay it off. Okay? Any questions about the early payoff option in the first year? Excuse me. Doesn't look like it. Great. Okay. So then beyond that, though, you guys, they can still pay off on the traditional Assurance Active product anytime during the policy life and save a lot of money. So this is a little bit harder to calculate. The best way to do this anytime you're going to do a payoff is to contact homesteaders and to get a payoff amount from them. That's the easiest way to do it, so you make sure that that amount is right. You can try to do the math. They can tell you, oh, we paid 6 of the premiums, and you know, but of course, if they are a little bit short or something, or your math's off just a little bit, that can be frustrating for a family when you give them an amount that you figured out and they still owe another premium or something. So I would highly recommend that you always call homesteaders on these issues and get the exact amount, the early payoff amount that they need to pay these off. So if they pay it off after the first year, they basically get a discount on their insurance costs for the remaining premiums. So, you know, the 3-year plan, of course, is 36 months. 5-year plan, 60 months. We all kind of know the math there. So taking this example there to the right, if the original face amount was $8,640 and they're on a 5-year plan and they've been paid in premiums for 18 months. So they're outside of the early same as cash option. They have 42 months remaining to pay. They save money on the insurance costs. So the way the math works on that is they're on a 5-year plan. So you take their $8,640. That's the face amount of the policy, not the funeral amount, the face amount. If they were just doing old school, what we'd call dollar for dollar, so subtracting, you know, or taking the 8,640 and dividing it by 60. So that's just simple, zero interest, zero premiums. So the result is that would be $144. Because they're paying it off early, you just multiply that amount by the months remaining of the policy. So they're only paying what we would typically know as principal amount, right, in the finance world, but they're only paying what it is to pay off the remainder of the policy without the insurance cost. So they still are saving significant money. Any time during the policy life, they can pay these policies off and save a lot of money. So same as cash in the first 6 months, same as cash plus $150 in the second 6 months, and then they save the insurance cost. If they go past a year, they save the insurance cost on any remaining premiums. And with the older ages, that can be half of the premium amount could be in the insurance cost. So they can save a significant amount, even if they're paying in the 5th, 6th, 7th, 8th year. They can save quite a bit by paying it off early. So it is important to know the early payoff options, and that you can effectively communicate that to the family. That, you know, again, you might get that phone call. We've all had it where you've done a 10-pay, you've explained there's going to be additional costs. They get their policy from homesteaders, or they do the math after you leave and they realize they're paying twice as much as what the funeral amount is once they make all their premiums. This is where understanding and being able to explain the early payoff option comes in really handy to save those policies And again, I would always recommend, you can send them this brochure, but I would always recommend trying to meet with them in person and just say, you know, again, the only reason why somebody would make all 120 payments is because they had no other option to pay this off early. There are several options you have to save money by paying this off early. Is your intent to pay it off early? Most people will say yes and say, well, then you're not going to be paying that amount because you're going to be paying your plan off early. This is what it is in the first 6 months. This is what it is in the second 6 months. This is what it is for the remainder of the life of the policy. You're going to save a lot of money. So if you have the ability to pay it off, I would certainly encourage you to do that.
I want to, Wes,
Please.
I just want to reiterate, if someone, or when, I should say when, because I had many of these calls, you met with a family, you were very clear, you explained to them about the cost of insurance, that it's how much it's going to cost over the 5 or 10 years. They get their policy, or a week or two later, or a day or two. Oh my gosh, Diana, I had no idea. This is crazy. We want to cancel. Immediately, first thing you do, go back, meet with them in person. Do not have that conversation over the phone. Usually why they're upset or frustrated or want to cancel is they feel like you've deceived them. Obviously you haven't. You told them what you've told them. I've been in this like countless times. I almost never lost the cancellation if I could see them in person. Trying over the phone, there's something about that trust that's just lost. You have to go back. Remember, it's me, it's Sherry, it's Jane, it's Nicholas. Okay, we talked about this. Let me explain to you again, because as soon as you build that trust again and they don't feel like they're being deceived, now they just need to truly understand it. You will be able to save that. Now you might have to reduce it. Maybe they can't afford the full amount, but you usually won't get a cancellation. But if someone calls you upset or frustrated, immediately that day, if you can, just get back over to their house and try to save that in person.
Absolutely. Yep, absolutely. So
West, I got another comment too. Going back to the 1 year payoff, homesteaders will actually send a letter out. I don't know if you're going to hit this or not. Homesteaders will send a letter out prior to the year coming, basically saying this is what your payoff will be, a letter to that. And so they will get notified from homesteaders that this is an early payoff option.
yes, they don't send anything out in the first 6 months, but I think they send that out around month 10. So they
Yes.
do remind them that they.
To everyone?
Go ahead, Jane.
Do they send that to everybody that has done more than, if it's not just paid all at once?
Yes.
Everyone that does a plan?
Yes.
Yeah, it's a mobile plan. Yes.
Okay,
Yep, absolutely. So
okay.
but if you've got a family that is wanting to think about paying this off within the first 6 months, it's a great reason to put a task in your CRM and just to follow up with them as well. So if you want to be the phone call reminder, you're certainly able to do that too, which is a great way.
Nicholas has a question.
Yeah, go ahead.
Okay, from what I understand, during the first 12 months, they can also make larger payments than what's necessary. Is that correct?
Yes, but, oh, go ahead, Wes.
No, that is correct. You can give them an amount that they can make larger payments. The downside of that, and just so everybody is aware, is that if they haven't sent in enough to pay off their plan in the first year, now there's not enough in what they would call advanced premium to pay off the policy. They'll send that money back to the family. So just be really mindful of, if you give them an amount and say, okay, if you make, this dollar amount monthly payment for the next 12 months, you're going to only get a bill, or it's going to only, of course, and you can't set that up on automatic either. But if you say, if you send in, when you get your statement and you send in this amount each month, and I would divide it by 11, not by 12, just to play it safe.
I've done that.
It will pay off your plan within the first 12 months, but it's really important that that extra money pays off their plan, because otherwise they'll get a check back from homesteaders.
Good to know.
And they will also get some sort of letter in the mail if they start making larger payments than the actual premium amount, just asking for a little bit additional information. I actually was called back to a family's house once when he received that letter and didn't understand what it was. And it just asked for like his social and some other stuff. But when I called homesteaders, they explained it to me as, something that has to do with the tax situation, and they can't hold additional funds for longer than a year. So.
Right. Yep. That's
Yeah, I guess-
exactly.
See, I thought it would convert what they've paid to the single premium and then just reduce the liability at the end. That's what I always thought.
You can do that. So we just had one of those recently. The family was a little short on their payoff amount. They got a check back. But you have to rewrite the policy to do that. So, but you can do it that way too. So, now that's kind of more of an automatic thing where they just send that extra money back. But just keep that in mind. You can certainly take that and rewrite the policy and do it as a single premium, and then they still have a little balance left. So that is an option too. But just know that if they're gonna, basically they need to decide what they're gonna do with that extra money at that 12 months if it doesn't pay off the policy, and that's where you're gonna come into play. So if that comes up, let us know. We can definitely walk you through it. We just had one recently where we just rewrote the enrollment form with all the premiums that they paid in. They had a balance of like $400 and something that they didn't pay, and then in this particular case, they just wrote a check out for the rest of it, and it worked out fine. So just kind of keep that in mind as you're moving forward. So again, if these things come up, just reach out to your manager, and they'll be able to help you in these situations. But just understand it probably more than anything, and just know that families have the ability to pay these plans off early. It really helps them just be more comfortable with knowing that they're not in, as Aaron shared, you do the math on that 10-year plan and people get kind of freaked out sometimes. So you don't need to pay the full 10 years. You can pay it off anytime you want, and these are your options. Okay, just really understand it. The other thing that I wanted to just review real quick as well, and then we'll wrap up the call, is the graded death benefit. This is one that comes up at times, and you got to be able to explain this well to your families too. And this is if they answer yes to either one or both of the health questions. So answering yes to both health questions does not exempt them from doing a modal pay. It just simply puts them on a graded death benefit. So it's just important to understand this, and you explain it to the family. If they're doing a 3 pay, the reason this says less than 5 years is in some states they have a 3 and a 4 pay. Actually, I think just in one state, so less than 5 years. So if they do a 3 pay policy, for some ages, that's as far out as they can go anyways. But basically, for anyone that answers yes to health questions, it's still a great product. It's still a great option for the family, but just, make sure that they understand that during the first 6 months of the policy that they get basically towards the cost of their funeral plan. They've still locked in their prices, so that's a great thing. So they're going to owe the balance of the contract, but they get their return of premium. So every premium dollar they paid in, plus they add 5% to that. So if they, have paid $1,000 in on their plan, that means their death benefit is $1,050. So they get 5% in addition to their premiums in the first 6 months. On a 3 pay, in 6 months to 1 year, so they've now lived 6 months and a day. In year 7, they pass away. They're guaranteed 50% of the face amount. So although they've only been paying for 7 months, if they bought a $10,000 policy, that policy is going to pay $5,000. The family is going to be left with the balance. Once the policy has been enforced, this is for a 3 pay only. Once the policy has been enforced for a full year, they have a 100% death benefit. So just throwing this out there, but sometimes this is really great when you're dealing with someone who's in their 80s, for example. They're still eligible for a 3 pay, and they maybe want to pay it off within the first year, but and they only have to live for 1 year, and then they have a 100% death benefit on a 3 pay. So while their premiums are going to be pretty high on a 3 pay 80-something-year-old, once they've lived for 12 months, they're 100% covered. So they can either go ahead and pay that policy off if they want to, or they can take their chances, right? Because they're older and they could pass away. But I've seen a lot of these types of plans pay out for people who are older who do a 3 pay and they live a year, and in the 13th month somebody dies and they've only paid a couple $1,000s worth of premiums, and they get a $10,000 or $12,000 death benefit. So That's for 3 pay. On the 5, 7, and 10 pay, it's very similar, just slightly different. So the first 6 months is exactly the same. They get a return of premium. So every dollar they paid into the plan plus 5%. That's in the first 6 months. 6 months to a year, they get 35% of the face amount. In the second year, it doesn't go to 100%, but it goes to 70%. So again, this is 5, 7, and 10 pay. They get 70% of the face amount. So if they've got a $10,000 policy, they live 14 months, they're going to get a $7,000 death benefit. The family's going to be left with the balance. Don't get confused by this too. When it says year 3, that means year 3 of the policy. So that's at the end of 2 years. So the first 24 months, first 6 months, then you have 6 months to a year. From 12 months to 24 months if they die, since the policy's been enforced at 70%. Once they've made it 24 months and a day, so they've started the 3rd year of their policy, they're guaranteed the full face amount. So these are people, again, who've answered yes to the health questions. This is another really important thing to explain, and also what a great benefit it is to them to be able to, possibly be in that situation where they have a health concern, but knowing that they're going to live for 2 years. They don't need to worry about it. It's going to pay 100% death benefit at the end of the 2-year period. So are there any questions about the early payoff option or the graded death benefit on the traditional product?
I have one quick question.
Go ahead, Jane.
So if they've answered no, if they're doing a 3, 5, 7, or 10, and they've answered no to both those questions, and they pass away in the first 6 months to a year, they still get 100%, correct?
Yes, absolutely.
It's only if they've answered yes to the questions where this would come into play, correct?
That is correct. However, I'll put a little caveat on that. Typically, if somebody answers no to both health questions and they die in the first 6 months of the policy due to a health-related illness,
They're going to investigate it, right?
Homesteaders will investigate it. Yeah. But
Right. Because then they're going to think they weren't saying the whole truth when they did the policy.
that's correct. So
If it's an accident or if it's something that just happens that's not like a heart condition or diabetes or something like that, and they just die then and they've answered no, then there would be less chance to question it.
you're
Correct?
absolutely correct. Yep, exactly. So if they live for 6 months, if they answered no to both the health questions, there will not be an investigation.
Also, I should add, kind of connected to that, Jane, if they answer yes, I have a heart condition and diabetes, and it doesn't matter what it is, you just put yes, you don't have to circle anything, by the way. But then they
Right.
die in a car accident, it is still then, there's no graded, it's not graded at that point.
That's correct. Yeah.
It's only if they died from any of the health conditions list, or some health condition. But if they fall off a roof or something, even if they'd answered yes, that's the benefit of being honest about it too, is just, even if they answer yes, they would still be covered if it was accidental. And then Sherry asked, are they covered as soon, right away? Yes, as soon as the policy's issued. If they answer no to the health questions, they're 100% covered from day one.
Okay, great.
Yeah,
Thank you.
I phrase that as you're covered from day one on accidental death.
Correct.
Short and
Yeah.
simple.
Yeah.
Right. That makes sense. Okay, thanks.
They do. I mean, the policy does state that you are covered from the date the policy is issued. With that being said, I've had a couple incidences where the policy was en route to the insurance company and they died of a car accident. They'll still pay it. With that being said, but just be mindful of having policies sit around. If you write something, you guys don't sit on it. If obviously it's online enrollment, they've got it that day. If you do the upload, they've got it that day. But be really careful about writing policies, especially mobile pay policies, where you wait a few days to turn in the contract. Maybe you have an internal process where it might sit on somebody's desk at the funeral home for a couple days. You really don't want to get in the habit of not getting these things turned in as soon as you write them. It's pretty important.
Okay.
Any other questions?
No.
So one thing too, I'll just add, and I did put a slide on this one, is that we don't talk a lot about like the other options besides monthly. You have annual and semi-annual and quarterly, but just keep in mind that when you're calculating with your device, like if they pay annually, they save 1 month premium if they pay on an annual basis. So it's another way if people have the means to do it, to be able to save some money by making an annual payment. And an annual payment is also another good thing to do if they're wanting to put a larger sum down but planning on paying it off in the first year. This is another great way to help them to not have to have a monthly premium. So they just make their annual payment. When they get ready to make their second annual payment, they pay off their balance. So it just kind of get creative with the way that you do this. Sherry Laura, her first policy actually was a family that wanted to make a large down payment and then wanted to pay the rest off when they were able to free up some money. They kind of made the decision, well, maybe we'll just wait to do this. We set them up on, I can't remember the exact details, but maybe a 6 month or an annual premium, and they just paid a large amount, and then we're going to pay it off when they're getting ready to pay their second annual premium. So just sometimes you got to get creative with these plans, but keep in mind that if they do something annual or semi-annual, they are able to save on their premium each year by going with an annual or a semi-annual option. So
yeah, if you guys have a family that has the means to do this, wants to move forward, they just have XYZ, whatever it is about money, we have to figure out money, we're not sure about something with money, please call us, because we almost always can find a creative way to make it work with home. You should never leave a house with someone who's ready to move forward, who has the means, they just need to move money around, or they're waiting on money, or you should never not write that policy. You should always be able to find a way to write it. That's actually what we're going to talk about next Tuesday on some of the closing tools. But if someone has the money, there's always a way. There's so many options. There's things we haven't even talked about today because it'll just, everyone's brains get cloudy, but there are a lot of things and resources and tools with homesteaders that we can get creative if we need to, so that we don't lose that business and so that family as soon as possible.
Yeah.
I have a question.
Go ahead.
Okay. So I had someone that wanted to write it, and it was the husband. The wife wrote and the husband wanted to write, but they do separate monies. They keep things separately. So he wasn't able to do his till July. So he said the funds that he wants to put down, he's going to do a 5-year or 10-year, whatever. They're pretty young. So that was available. But in order to put in a policy, you have to put it in with money. So written that in May, correct? Correct.
Yes. You're saying he was able to do monthly payments, or was not able to do monthly payments, or was going to pay in full in July?
No, he was going to do monthly payments, but when I said, when you do the agreement, if you don't want to put any money down, the first premium will be taken out when we submit the policy.
Correct.
And he said, I can't do that. I have to wait till the beginning of July. Then there was no way for me to write that, correct?
That's correct. Yeah. I mean, they have to be able to at least make the first month's premium.
That's what I thought, but I was
Can
just
you
checking.
cover a couple months premium for your husband until he can pay
Well,
you back?
that's it. That's what I told her.
Yeah.
But she said he was more comfortable just waiting the next month. So I'll write it in July, but you
Right.
know.
Right.
Okay. Thanks.
I more am referencing when people say we just want to wait till we can pay it in full. That means they
Okay.
have the means. You should never leave a house or well, they just gonna wait till they have all the money together. I'm sure they're gonna do it. They're very serious. No. They're write the business. You guys all know as soon as you walk out that door, your odds of closing it go down in half at least. So just do everything you can, at least get it started. I mean, kind of what we've talked about here today. There's a lot of options. And then they have 6 months or 12 months to pay it in full.
Right.
Absolutely. Yeah, absolutely. Okay, guys. Well, that takes us well past our allotted time for the day. Thanks for being on the call. Please reach out to your manager. Watch for some paperwork to come through if you haven't already been set up with the select product. Some of you on the call have. Most of you haven't. So please just reach out and we'll be getting you some paperwork. It's really simple. You got to just sign a contract change form to add a new product, and then we'll have you sign the commission sheet. Of course, keep copies for yourself. Commissions are, but and then the last homework assignment is just do some mock premium comparisons between the two products, so you can kind of get a sense for how much people will save by going this route as opposed to not doing anything. So, anyways, that's all we got for today, everybody. Thanks for all your questions. Thanks for your interaction. And let us know what we can do to help. And then the email I sent out too, this is really important. We're trying to plan out our call for next week. There's a lot of appointments that are on the calendar for this week. Please help us out that if you go and you give a presentation, but the family does not buy and they give you some specific objections on why, just send a text or an email to your manager and just had an appointment with the Smiths and they didn't buy, and this is the reason they told me they didn't want to buy. We're trying to compile as much of that as possible so that we can then address all of those objections on next week's call. So real life experience, you guys are on the ground, you're getting the feedback, you're hearing what people are saying. Everyone that decides not to buy this week, just send us a quick note on why they decided to wait or to put it off or to not do things, whatever the reason is, so that we can really start to kind of dissect our sales process and make sure that you guys have got the tools to be able to ourselves. So please help us out by sending us that information over the next week. It will help a ton for next week's call. Thanks, everybody. Have a great day. Take care.
Bye, everyone.
Thank you.
Thank
Bye.
you.
Have a great day.